Hello everybody, my name is Nick and this is Load TV. As always, if this is your first time joining us, please go ahead and subscribe to our channel as well as check out Load.one to learn more about how Load is putting idle silver to work. And if you're already a member, welcome back. Now, today's guest I have Frank Holmes, who is the CEO and CIO of US Global Investors. Frank, welcome to the show.
It's great to be here. I've just flown in, get a chance to change, and I've had the opportunity to share my insights with you.
Frank, it's certainly been interesting across almost all markets ever since the Fed cut 25 basis points. And then we saw some pretty negative news about the US-China trade wars, and the markets have reacted swiftly. Equities have taken a steep decline, and cryptos and metals rallied. We saw gold trading at 1,500, silver at 17, and Bitcoin was once again approaching $12,000. But let's start with the precious metals first. What are your take on this recent rally, and how long is it likely to continue?
Well, alternative to paper, anything that's alternative to paper that's liquid has gone up in appreciation. And the big reason for that is that 25% of the world's government paper debt is trying to seduce you to buy their paper with a negative real interest rate. And anytime that happens, gold goes up in that country's currency. And now we're seeing it. The US was positive and is now trending lower and has gone negative. In fact, the 10-year government piece of paper in the US has a negative rate of return. That's what propels gold up. And when gold hit 1900 in 2011, it was because the 10-year government bonds yield was minus 300 basis points. And then gold fell to 1,000 because then interest rates, inflation fell, and rates went up to a plus 200 basis points. So now we're doing that reversal, and the rest of the world is being pulled into it. So we are a third of the global economy. The rest of the world has basically gone negative, and now we're joining the crowd.
And what are your targets for silver and gold?
Well, I think that it's all a reflection for US dollar terms. It's all a reflection on how great the negative rates go. So if the 10-year government bond goes to 100 basis points and inflation stays a little over 2%, then you can easily see gold 1,700. If it goes to 200 basis points negative spread, you can see gold through 2,000 in US dollar terms. But I really think what's just shocked me when I look at the global picture is Asia, Southeast Asia. There's really not been big buyers of gold by their central banks like we're seeing in Eastern Europe. You're seeing a more conservative swing in the past 5 years of political leadership in both politics and financial ministers, and they've been buying gold. Poland continues to buy, Hungary continues to buy, and I'm talking about 6 tons a day. So it's quite interesting to see all the major hedge funds now in New York have committed to gold as an asset class. And we're just seeing this grow. And with that, you've had Bitcoin. And the Bitcoin is an alternative asset class. And it rallied up to 12,000, fell back to 11,500. I think it's going to have a new base here over 11,000. And if we do see gold run to 1,700, I think that Bitcoin goes to 15,000 because it's a liquid global international asset class. But remember, it's not gold. You need electricity. With gold, you don't need anything, but just the fact that it's portable and it's the 4th most liquid asset class in the world.
Really glad that you brought up Bitcoin, as we're going to be talking about it in a little bit. But given that there are so many factors that move the markets, do you really feel like negative interest is the one key thing that is driving things?
Yes, because most of the world is basically trying to seduce and induce you. And you know what they're doing? They're not getting you as an investor to go buy their negative rates of return. They're printing money. So you're seeing this money supply growing. And unlike in the US, in other countries like Japan and Switzerland, they're the biggest buyers of their stock market. They are the biggest. Their central banks are basically printing paper and going out and buying these equities through an ETF format.
All right, now swapping over to Bitcoin. We've seen Bitcoin rally in a relatively volatile equities market. What do you think's in the card for Bitcoins in the near future?
It was interesting because the bottom this year took place when JP Morgan came out with their stable coin. And for over 18 months, JP Morgan did nothing but trash talk Bitcoin all the way down from 19,000 to 3,000. And when they came out and announced their stablecoin, that was the pivot bottom. And then Bitcoin took off through 10,000 when the Libra coin came out by Facebook. Now that's receiving a backlash around the world by central banks, and particularly Switzerland, the Bank of International Settlements. But it's telling you something is happening. And we're going to see, we do not know who's going to win this sort of digital currency race, but it reminds me of 1997. We used to all go to Ask Jeeves for information. And then it was Yahoo, and then Facebook became the dominant leader. So we don't know yet.
Out of curiosity, do you feel Bitcoin's recent price action signifies that it is a true portfolio diversifier for investors?
It's a true alternative asset class. There's no doubt about that. And remember, for those listeners, there's 10,000 nodes around the world that are involved in verifying these transactions or crypto mining. Like being the chairman of Hive Blockchain, we're the first industrial scale blockchain company going on mining these coins, and we're doing it in the cloud. We're 300 petahash, and we're mining Ethereum in Iceland and Sweden. We produce these. We produce what's called a virgin coin. It's never been touched, so it has greater value. But beyond that, there's another 10,000 nodes around the world. So it has a complete audience of true believers.
I'd love to get your perspective on the U.S.-China trade front. Do you believe that we're in a full-blown currency war?
That's a great question. It's what's important when we stand back at 50,000 feet and look at the world. I like to look at the big 30 to 40 percenters. So what is 30% of the world's economy? America. It has big punching power. In addition to having the most powerful military, it is the biggest GDP by a long shot with a small population. Now we go to China and India. Collectively, those two countries are 40% of the world's population. That means they eat a lot of food. That means they consume a lot of gas and oil and other products and energy. And then we go and we can take a look at, as consumers of that, we look at global trade. 40% of all global trade is China and America. China and America are in a trade war. So this has a significant impact. And what we've seen is by other central banks around the world, actually they're aligning themselves with America. They're not coming out and being vocal about it, but they're basically aligning themselves with their policies. And they're devaluing their currencies. Now we're finally seeing China devalue its currency to try to catch up. And what amazes me is the euro. I was just there. I just couldn't believe how expensive it is. Hotels or whatever it is, and how little people make on a monthly basis in jobs compared to, say, here. So I think the euro has to go down. Definitely be at par or less than the US dollar. So during this whole process, and this trade war is having a big impact on how people are responding to it. It could go on for another 6 months.
All right, Frank, last question for the day. All things considered and all these markets taken into account here, what are you presently buying at the moment to protect yourself from the current environment?
You know, it's always a good question, and we've always had the golden rule. That is 10% of your assets should be in gold and gold stocks. And for the ETF world, that's why we launched GoAU. It's a smart and quant-based ETF in New York, and it's done its job. It's outperformed the GDX and GDXJ year to date, 2 years since we launched it. So we're thrilled about that as a concept of having at least 10% of your portfolio in that type of an asset class. And the other thing that's important that Morgan Stanley came out with is that for the past 20 years, the number one performing asset class have been REITs. Number two has been bullion. And guess what? The largest hedge fund in the world, Ray Dalio's Bridgewater, believes in 6 to 10% in gold as an asset class. So yes, gold is a key component. I think tax-free bonds, and if you're an American, are very important asset class to have. Short-term tax-free bonds, I think that's important. And if you're going to be buying stocks, you've got to make sure they have growing dividends from organic growth.
All right, thank you for joining us.
Happy investing.
That's all we have for today's interview with Frank Holmes, the CEO and CIO of US Global Investors. Thoroughly hope that you guys enjoyed the interview. And as always, if this is your first time joining us, please go ahead and subscribe to our channel, as well as check out Lode.one to learn more about how Lode is putting idle silver to work. That's all for today, guys, and take care.